So, in this video, we will show you our best trading indicator that is key to our trading success. Make sure to hit that subscribe button and ring that notification bell to see our future videos. This indicator is used by institutional brokers. These are the people with big money who move the market. If the institutional brokers are using it, it is a good idea to keep it on your trading chart to make profit. So first, what is VWAP and why people with big money use it? Let's look at an example. So, here, we have an intraday chart. And, here's the first 3-minute candle of the day. The blue line is the VWAP indicator. To understand why VWAP works, imagine this. Let's say a broker wants to buy some million shares of a stock, as requested by his client. The broker won't chase the market and buy shares at the top. His goal is to buy the shares at a fair price, so his client will be happy. Remember, VWAP stands for volume weighted average price. Therefore, the client will be most likely happy to buy shares at average price, instead buying at the top. Since professional brokers are trading at the VWAP line, it is a good idea to make use of this indicator in our strategy. Okay, so now we understand how it works. Let's see how to use it to make money as a retail trader. There are a few key things to note about the VWAP indicator. Number 1. VWAP line will remain same on all intraday time frames. If you switch the chart from 5 minutes to 15 minutes, the VWAP line will stay at the same price. This is a good thing, because everyone who is day trading will see the VWAP line at the same price, unlike a moving average. This will lead to increase in buying and selling near the VWAP line. Increased volume will increase the chance of getting your order filled at your defined price. Number 2. VWAP only works on intraday time frame and doesn't work on daily. Number 3. If the stock is trading above the VWAP line, it is considered as an uptrend. Similarly, if the stock is trading below the VWAP, it is considered as downtrend. Number 4. VWAP line can act as a support or resistance on a trading chart. Here's a real-life example. On this stock, look at how it opens with a gap up, then goes up, falls towards the VWAP, and bounces back. We can see that VWAP is acting as a support. And, since market is above the VWAP, we can say the market is in an uptrend. You can see how beautifully price bounced at the VWAP line before finally breaking the high of the day. Obviously, you shouldn't take trades every time price reaches the VWAP line. You should wait for the right entry signal before risking your money. In this case, we could have bought some shares at these buy signals that are near the VWAP line. Let's see a downtrend example. After that, we will see some complex examples to make sure VWAP works as intended and we understand it properly. After all, we don't want to risk our money on something that doesn't even work. This stock opens with a gap up, but was not able to keep the upward momentum. It finally broke through the VWAP line, starting a good downtrend. Then, gave a pullback, but couldn't cross the VWAP. Since this is a downtrend, VWAP line is acting as a resistance. You can see how the price rallied its way down after touching the VWAP. You could have sold some shares with some good entry signals. You can set the stop loss above the VWAP line, as price can retest the line few more times before finally going in your direction. This chart is a little bit more complex than the previous two, but let's break it down. First, the stock opens with a gap up, then hovered on the VWAP line. Also, if you haven't noticed it yet, VWAP is an intraday indicator. Therefore, the VWAP line will start from the body of the first candle of the day. Okay, let's focus on the chart. The stock opens with a gap up, then hovered on the VWAP line. After an upward push, it found support at the VWAP. Once it broke below the line, the VWAP was acting as a resistance. Then, price rallied down, starting a clear downtrend. Gave a pullback, and then found resistance at the VWAP line for the second time. You can see, the VWAP worked perfectly on this day. Now, if you take trades based on VWAP direction, your chances of being right is already more than 50%. Which is good, but we can increase it even more by using a simple technique. We will use the most used indicator out there, the 200 moving average. 200 moving average can help you filter bad VWAP direction signals. Let's understand it better with an example. Here, you can see that the stock is in an uptrend because the price is trading above the VWAP line. So far, VWAP has worked. But then, it went straight through the line and started a downtrend. What happened here? Well, if you apply 200 moving average on this chart, you can see the price touched the 200 moving average line and then went down. 200 moving average acts as a strong support and resistance. And, similar to the VWAP, if the price is below moving average, stock is considered in a downtrend. Therefore, it is good idea only to take trades when both VWAP and moving average are indicating a same trend. 200 moving average will keep you away from being in the opposite direction of the long-term trend. Let's look at another example. But this time, we will use the 15 minutes time frame, so people who are not comfortable on shorter time frame can understand it as well. As mentioned before, VWAP line will remain on same price on every intraday time frame. Here, the stock opened with a gap up and stayed above the VWAP line before finally making a new high of the day. You could have bought the stock near the VWAP, or you could have simply identified the direction of the trend using the VWAP line and then entered the trade at the breakout. Either way, you could have made a profit. I've been using VWAP indicator for a long time now, and this is without a doubt the best indicator I have used. It has helped me identify the trend and the average price of the stock. Here are some mistakes you should avoid when trading with VWAP indicator. Just because the price crosses the VWAP line doesn't have to mean that the trend is changing. A lot of new traders make this mistake. I've seen them doing it on the moving average as well. If the stock price wants to find support or resistance at the VWAP, it can do it a little bit above or a little bit below the VWAP line. It doesn't have to be exactly on the line. If the price breaks below the VWAP line, you should wait and see if the price continues in the downward direction. A good rejection of price at the VWAP can be used as an indication that VWAP is now acting as a support, and price can fall further down. Okay, let's summarize what we know so far. VWAP works as a support or resistance on a chart. If the price is above the VWAP line, we can assume that there is an uptrend going on. Similarly, if the price is below the VWAP line, we can say that the price is in a downtrend. To make sure we are also in the long-term trend, we use 200 period moving average. Furthermore, to increase your chances of being right, only take trades if both 200 moving average and VWAP line are indicating the same direction of the trend. Just because the price crosses the VWAP line doesn't have to mean that the trend is changing. If the stock price wants to find support or resistance at the VWAP, it can do it a little bit above or a little bit below the VWAP line. It doesn't have to be exactly on the line. It is good idea to backtest and get to know the VWAP indicator better before using it in moving markets. Backtesting will also increase your confidence in your trading strategy and will also stop you from taking stupid trades in a moving market. VWAP is similar to a 20-period moving average, but VWAP also takes volume into consideration. Moving average only looks at the previous candles and not the volume. That's why moving average can appear differently on different time frames when VWAP remains the same. If you are a beginner, I would not recommend you to use many moving averages with VWAP indicator. Because, if you do, the chart will look very confusing, and you may end up taking trade in the wrong direction. Keep your trading chart simple, and trade quality over quantity.